Hey everyone, and welcome to our first Metric Minute, where we'll break down some key takeaways from the week's State of the Network issue, which is our weekly newsletter covering crypto markets and on-chain activity. This week, we're diving into highlights from our Q1 2025 wrap-up. So Q1 painted a pretty clear risk-off picture in terms of market performance. Macro uncertainty dragged the crypto market down 19% to 2.65 trillion. Bitcoin held up relatively well, dropping around 7%, but other assets like Sol and ETH saw steeper declines. Investors generally turned to safe havens like gold and bonds in this environment. The stablecoin sector, however, stood out as a bright spot. Total stablecoin supply reached 230 billion, with USDC nearly doubling over the past year to 60 billion. Both Ethereum and Solana hit all-time highs in stablecoin supply at 130 billion and 12.6 billion, respectively. USDC on Solana and PayPal's PyUSD on Ethereum were the biggest movers in Q1. And USDC on Base alone drove 2 trillion in adjusted transfer volume in just the first 2 months of the year. Ethereum had a tougher quarter as the ETH-BTC ratio dropped to a 5-year low. On-chain activity on mainnet also declined, and total fees are down to around 500K today from 30 million in March 2024. Also, with the transition to the L2 scaling model, block fees currently only make up 0.07% of total fees. And ETH burn has also slowed to around 75 ETH per day today. As a result, ETH's net issuance is up as more ETH is being issued than burned, and the annual inflation rate is now at 0.78% as a result. Solana started the year off with a pretty big stress test thanks to the Trump memecoin launch. Activity on the network surged with fees and MEV tips peaking at 50 million before they cooled down to around 2.8 million as activity has cooled. The network also passed SIMD 0096, which redirects 100% of priority fees to validators. That's now led to a major drop in SOL being burned from nearly 16K daily to below 1,000 daily. Thank you for tuning in to this week's Metric Minute, and we look forward to bringing you more insights next time.